Welcome to the Capital News. I am your host, Alex Karitis. Today is May 8th, 2019. Thank you so much for joining me. I hope everyone out there is doing well. So, quite a bit to get to today with the market news, so let's just get right into it. The S&P was down 4.5 points. The Dow closed up 2.25 points. The Nasdaq was down 20 points, and the Russell 2000, the small cap index, was down 7 points. Now, of course, that doesn't tell the full story because these markets were choppy today, and while we've grown accustomed over this V-shaped recovery over the past 4 or 5 months now already, since we're already in the month of May, we've grown accustomed to seeing a lot of buying taking place during the last couple hours of the trading session, more specifically the last hour or even 30 minutes of the trading session. Well, what we saw today was the exact opposite. We saw a major sell-off at the end of the day. It was a complete mirror of what we've grown accustomed to seeing. Now, again, one day does not make a trend, but it's something to be cognizant of and to pay attention as we go forward in these more or less volatile times, because we have a president that is taking to Twitter to talk about trade policy, and you have the global economy and global markets selling off. This is in the tunes of trillions of dollars globally that have basically been lost when you have a president come out and tweet what he has been tweeting. Again, too much power in the hands of one individual. It's not how markets are supposed to work. As far as I'm concerned, the only type of headline that should cause that much of a sell-off has to do with war. Now, I understand maybe some people want to consider this a trade war or whatever, but the president should not have this type of power over the markets. He just shouldn't. It's something that irks me, and those of you who have been following me know this to be the case. I just strongly disagree with it. He wants to have negotiations. That's fine and great. Fine and great, and I hope that there is a resolution. Again, we argued that this has to do a lot more than just trade. This isn't just about soybeans and corn futures. This is about some real nitty-gritty stuff that has to deal with what's been taking place over the past 20 years with the loss of jobs, technology transfers, the theft of IP, the transfer of intellectual property, cyber warfare, all of those types of issues that need to be dealt with, and rightly so. But for the president to come out and to move markets, this is what I'm telling you guys, you have to be aware of this. You shouldn't like it. You shouldn't like it when the president does it, whether it's a Republican or a Democrat. I mean, I know a whole bunch of people who might be listening who lean more towards the Republican side. If President Obama was doing this, they would be outraged. Why is he involved in the markets? It's supposed to be a free market, right? They would be outraged. See, we told you he's a socialist. We told you he thinks he's a dictator. Don't get complacent just because, quote unquote, your guy is the captain of the ship now. Don't do that. Don't play that game, because that's the game that they want you to fall for. Divide and conquer. Become complacent because your guy is in power. Don't do it. You know, everybody loved George W. Bush. Then they didn't like him. Then they said, oh, well, now we need to get our guy into the Obama. Okay, so now President Obama becomes President Obama. Okay, now he's there. He's the Democrat. Okay, now the Democrats simmer down. And then the Republicans get upset. And then they vote in Donald J. Trump, and now he's President Donald J. Trump. Don't get complacent. That's what they want. Find what you believe and stick with it. Don't just say, well, it's my guy. Well, I guess he can get away with it. It's not how it works. It's not how it works. So it irks me. It bothers me. But nevertheless, this is the world in which we live. Just because it bothers me doesn't mean that the president's going to stop doing it, because he is not going to stop doing it. He enjoys this, I think, much too much. Oil was down a little bit. We had $61.43. Brent is at $69.58, both down about a percentage point for the day. Brent is under $70, so that's interesting from a technical standpoint. Is that going to have some follow-through? We'll have to see what happens tomorrow. If it stays below 70, then maybe we're in the midst of some sort of reversal, or maybe there's just some sort of sideways consolidation taking place. But nevertheless, that's what we've been talking about here. We did not anticipate the oil markets to continue with their upward advance, barring some sort of major geopolitical event that would cause a shock to the oil markets. So far, that has not been the case. So when you're simply looking at the supply and demand functions of everything, it looks like it's heading in the direction that we anticipated that it was, to the downside. Gold, meanwhile, despite the sell-offs that were taking place, U.S. equities, mainly the Asian equities, gold and silver are still not being seen as any type of safe haven. In fact, they still continue to trade to the downside. Gold is now at $1,279 an ounce, down slightly. Meanwhile, silver is now at $14.82, also down slightly. The U.S. Treasury, the 10-year note, is up 1.4%, so there was some selling in the bond market, and now sits at 2.482%, so there was some selling of treasuries. Now, could this be a counterplay by the Chinese? Because they hold a lot of U.S. debt. If they start to sell U.S. debt, what's going to happen to yields, folks? They're inversely related. So if you're selling, the price of the bond is going to go down, but the yield is going to go up. So is this going to maybe have an impact on increasing yields? Time is going to tell. But again, the president took to Twitter today, and I'm going to get to that momentarily. But first, I just want to update you guys on a couple things that we had a previous conversation on earlier in the week regarding some central bank news. So we have the Reserve Bank of Australia. They had a policy meeting this week, and so did the Reserve Bank of New Zealand. Well, the Reserve Bank of New Zealand cut interest rates to an all-time record low. Meanwhile, the Reserve Bank of Australia remains steady, and they too are at basically an all-time record low, but they've been there for, I think, the 33rd straight month. They've been at 1.5% on their cash rate. So it was, I think, expected pretty much by the markets. The Reserve Bank of New Zealand was sort of floating the idea out there at their last meeting last month that, things were starting to sort of, cool down a little bit, that they want to maybe stimulate their economy, and perhaps there would be a rate cut. Well, they followed through with that. So New Zealand is a developed country. They cut their interest rates. Reserve Bank of Australia, we said the markets were predicting it was 50-50 as to whether or not they were going to remain steady or if they were going to actually institute a rate cut. Now, I think part of the calculus, now they would never admit to this, of course, but I think part of the calculus as to why they remained steady had to do with the fact that Australia is going to be taking part in elections in a couple weeks. So the Reserve Bank of Australia probably wanted to look as apolitical as possible and didn't want to make it seem like they were trying to persuade voters one way or the other in their political elections in the coming weeks. So what's going to take place with the Reserve Bank of Australia in the future? Well, if you look at the markets, they're anticipating a rate cut pretty much, I think, almost with 100% certainty out in September, with obviously everything looking a little bit more probable as you make your way down the road to September. So it's going to be interesting to see what Australia does. It's not going to be any surprise to us here at the Capital News if the Reserve Bank of Australia follows suit of the Reserve Bank of New Zealand and actually cuts interest rates, which would also make their cash rate an all-time low. It's just no surprise because we've been talking about some of the risks to the markets for 2019 and beyond, and Australia has been front and center, particularly when it comes to their housing market. And now when we have these trade negotiations pretty much in a state of flux, and China being a major trading partner of Australia. I mean, Australia is well endowed with natural resources, a lot of iron ore, coal, natural gas, oil, a whole host of things. They mine it and they just simply put it on ships and ship it up to China. And that's what they've been doing really for the past 20 years, which has allowed the Australian economy to skirt any type of formal technical recession. They haven't had one in 20-some years. And that's in large part because of the growth of China. So if China starts to slow down, you're going to see in a large part Australia slow down as well. So if these tariffs go up and are basically enacted for a longer period of time, that will have negative consequences on the Chinese economy over time, and subsequently it will affect Australia. It will also affect New Zealand. So I don't know the political calculation or the economic calculation. Perhaps the Reserve Bank of New Zealand is trying to get ahead of these trade war. Maybe they're saying it's going to escalate. Maybe they're just trying to hedge their bet that, in the event that the trade war does escalate, well, at least we have lower interest rates to perhaps stimulate the economy or act as some sort of buffer should things turn south, either because of the U.S.-China trade talks or just because of other reasons. Everybody here knows the reasons as to why China may be slowing down. So expect the Reserve Bank of Australia to lower interest rates some point this year. Do not be surprised if it happens. That's going to be the same case with other central banks the world over. There's been a policy shift here, folks. Everything was fine last year. Now everything is not so fine. Just all, snap of the finger. Snap of the finger. Blink of the eye. Oh, no. Some data points. We don't like it. There was a sell-off in the markets last year. We don't like it. Okay, all right, sorry. We didn't mean to take away the punch bowl. Okay, calm down. We'll cut interest rates. Maybe we'll even embark on quantitative easing. I don't know. That remains up in the air. But this is the world in which we play. This is a central banker's world. This is a president's world who tweets and markets move. It's not a good one, but this is where we are, so we have to pay attention. So moving forward with the president, he took to Twitter earlier today and stated the following. The reason for the China pullback and attempted renegotiation of the trade deal is the sincere hope that they, the Chinese, will be able to negotiate with Joe Biden or one of the very weak Democrats and thereby continue to rip off the United States $500 billion a year for years to come. Guess what? That's not going to happen. China has just informed us that they, Vice Premier, are now coming to the U.S. to make a deal. We'll see. But I am very happy with over $100 billion a year in tariffs filling U.S. coffers. Great for U.S., not good for China, ! Now, I think the president in this tweet, it was a couple tweets, obviously, a little bit longer here, he makes a couple good points. I honestly happen to agree with the president on this one regarding his take on why China may have started to renegotiate or pulled away from the trade negotiations and said, wait, maybe we can, we want to relook at these things, go down some different avenues here. I think the Chinese are here for the long term. They are playing the long game. They have gotten away with murder for the past 20-some years. They pulled the wool over the eyes of Clintons, of the Bushes, of the Obamas, and now President Trump, he's saying, you ain't going to do the same thing with me. At least, that's the political posturing. And at least from what we understand from these trade negotiations, there are some really good there are some good efforts here on behalf of the United States to get the Chinese to play ball, to stop with the IP theft, to stop with the forced technology transfers, to stop with the cyber warfare and all the games that they're playing. Now, of course, we do it too. But at least there is finally an effort from an administration to say, all right, you know what, you've gotten away with murder, you've taken a whole bunch of jobs, enough's enough. We don't like it. Okay, maybe you can argue, all right, you know what, these are low-paying jobs, low-skilled, okay, you get some of those, we get it. But forcing technology transfers, stealing IP theft, making those conditions of doing business in China, we ain't having it. That's American innovation. You can't have it. Not that way. No longer. And of course, the Chinese don't like it because they've been living high off the hog for the past 20-some years, right? That's part of the whole economic miracle that is China. They figured out the special sauce. We'll be communists. We'll be state-controlled. We have 1.4 billion people, and that's it. You can't fail, especially when you have corporate America and Wall Street as your PR department and investors' relations department, respectively. We had that conversation earlier in the week. I believe that to be the case because when you turn on the financial mainstream media, that's all you hear. China can't fail. Everything's fine. Everything's fantastic. It's not true, folks. They cannot defy economic gravity forever. We talked about some of those presentations, the Committee on the Present Danger of China, and where you had some investors giving some presentations up there and talking about some data points and talking about Hong Kong, their square footage. They're selling real estate at $10,000 a square foot. Could you even imagine that? $10,000 a square foot. That's ridiculous. And that was for a number of reasons which were explained there. But nevertheless, how long do you think that's sustainable? Okay, now that's Hong Kong. You have other areas within China that are basically experiencing the same type of problem at a time when the economy is starting to slow down. So this is going to be a rollover. Is it going to be a hard landing or a soft landing? That's the question. It's really just the question. I think it'll be a hard landing. That's just what history tells us. I don't think the Chinese are the masters of anything, to be perfectly honest with you. Propaganda, obviously, disinformation, they're very good at that. Forcing IP theft, forcing technology transfers, they're very good at that. There are some other things in that presentation. I'm going to have to get to it another time, but there were some con jobs that were pulled because they also had an investor who was looking in and hired some investigators and did some of his own investigation as to what was taking place in China for due diligence purposes. And, I mean, it's beyond the pale, to say the least. But I'm not surprised that it took place. But if we look to the Asian markets right now, we have the Nikkei, the Japanese markets, down at the time of this podcast, down well over 200 points, representing 1.25 percentage point to the downside. The Hang Seng is down 500 points, about 1.5 percentage points to the downside, and the Shanghai Composite is down anywhere between 0.5 percentage point to a full percentage point. So there's still a lot going on here with the president taking to Twitter, saying, look, these tariffs are coming. They're coming. We'll see. Yes, the trade delegation, the Chinese trade delegation is coming to Washington, D.C. tomorrow. And according to his tweet this morning, they want to make a deal. But we'll see, was his very next word. We'll see. Now, that was this morning. Was the president attempting to prop up the markets? Because they've been selling off for the past couple of days. We know this. So was this, well, they're coming to make a deal. Does that mean there's going to be a deal? So he played this card many, many times before throughout the 2019. We have conversations on this many, many times. Too many for my liking. But nevertheless, it's the news. We have to talk about it because it is moving markets, unfortunately, to great degrees. So did he think he could come out this time and, it would move everything to the upside, everything would be A-okay? Because if that's what he was hoping for, that was not the case. It was not the case. There was a short-term bump, but for the most part, these markets ended up to the downside. It's going to be interesting to see what happens tomorrow because as of right now, the Asian markets are all trading down because Donald Trump was at a rally this evening down in Florida, and he says the following. He says, China broke the deal and will face tariffs if no deal is agreed. Now, we also know formally, that the U.S. Trade Representative, that office has filed the requisite paperwork instituting tariffs on China to go into effect on Friday. Now, is it possible that there will be an 11th hour and 59th minute trade deal? It's possible. Again, we were speculating on the geopolitical podcast in episode 64A today and also yesterday, and I think we had the discussion on the economic podcast as well, speculating that perhaps a deal has already been agreed to, and this is just the president trying to play the strong man and saying, look, this is what you got to do. You got to act tough. You got to be tough to get what you want, and I'm going to enact tariffs if they don't come to the table. Meanwhile, there was already a deal. Again, that's speculation. I don't necessarily think that's the case. I think he is more likely to place tariffs on them. I don't think the Chinese are likely to make a deal. I really don't. What's going to be the enforcement mechanism? I don't think they're just going to do a 180, turn on a dime, because the president took to Twitter this weekend and continues to do so on Twitter and in a rally this evening, saying that the tariffs are going to go into effect because the president's the tariff man and he loves tariffs. Because he thinks, I don't think he actually thinks this, but this is what he says. He wants you to think it. He wants you to believe that the Chinese are taking out their checkbook and they're writing a check to Uncle Sam for $100 billion. That's not the case. You and I are paying these tariffs at the cash register and higher prices. But of course, there's no inflation or anything, nothing to see here. None of that. Again, this is more than just trade, because when you just look at the numbers, it's peanuts on two economies combined are over $30 trillion. That is a huge number. This is more than just soybeans, cattle, pork, and corn, and cheap knockoff goods. This is about IP theft. This is about forced technology transfers. This is about the Chinese getting away with murder for the past 20 years, taking our economy to the wood chipper. That's what this is about. No ifs, ands, or buts about it. We had the conversation about what Steve Bannon said. I happen to agree with his analysis on what's been taking place here. I want the Chinese to be successful. I want those people, their economy to grow. I want that to be the case everywhere. I want people to have better access to everything that is good. I mean, indoor plumbing, for God's sake. I mean, that would be a good start. Electricity, medical care, health care. These would all be good things if the rest of the world had more access to these things. People would be healthier, people would live longer, and hopefully people would live more harmoniously, because now people aren't starving to death, aren't dying needlessly. And I say, well, this whole concept of war is, what's the point? Because, things are in abundance. We're working together. We're trading with each other. We're talking with each other. That should be our goal as human beings. Now, is that going to happen? Probably not, but I'm hopeful. We'll see what happens on that. But also, I just want to bring this point back to you guys, too, and we had a deeper discussion on the political report today. But this is just another point. This is another box that the president can check off and say, look, yeah, the stock market's turning down. Maybe the economy will go with it, but at least the stock market's going down. You know what? It's not my fault. It's not my fault. I told you in the State of the Union, there's only a few things that can derail this economic miracle: endless wars, political divisiveness, partisan investigations. Okay? We know he's added a couple more to that list. He's been talking about the Federal Reserve. He's been attacking them consistently for the past few months because he knows if and when this economy and or the stock market turns south, he ain't going to take responsibility for it. He wants somebody to blame. Now, we have tensions rising in North Korea, Iran, and Venezuela. So there's your endless wars. You can start to check that box a little bit. We're still in Afghanistan, we're still in Syria, there's still issues with Libya and a whole host of other things. And then there's always the wild card. Maybe somebody somewhere starts something, right? So endless wars is still front and center. You can check that box. Political divisiveness. That ain't going anywhere. I mean, the president himself is the master of disaster in that one. He is making sure that political divisiveness remains at the forefront, okay? And the Democrats aren't going away with it either. So that's here to stay. You can check that box off as many times as you want. That ain't going anywhere. Partisan investigations. Those aren't going anywhere either. The Democrats have dug in too deep. They can't do an about face with it. They're just not going to. There's, more talks of impeachment. Elijah Cummings, Nancy Pelosi, Adam Schiff, Jerry Nadler. You know the names. They're going to continue with these investigations. So the first three that the president mentioned back in February during his State of the Union address are alive and well. They're front and center. So check those things off. He has those people to blame. He can blame the endless wars, and he can blame the Democrats, which he will do. He also has been setting up the Federal Reserve because he has told the Federal Reserve to cut interest rates first by 50 basis points, now by 100 basis points, a full 1%. Also embark on quantitative easing in the midst, he would have you believe, of the greatest economy ever in the history of the United States and therefore the world, okay, which is not the case. So why would you have to embark on lowering interest rates in an emergency measure such as quantitative easing? You'd have to ask the president. But of course, this is what he wants. Is he setting the stage? This is an important question. And now we have the trade talks starting to slow down. They're in a state of flux. The Chinese broke the deal. China broke the deal and will face tariffs if no deal is agreed. Well, they have 2 days to agree a deal. Otherwise, the tariffs are going into effect this Friday. So endless wars, political divisiveness, partisan investigations, the Federal Reserve, and now China. I told you, folks, the president, man, can this guy dance? I mean, I knew he boxed himself in. He wanted to take ownership of this stock market. He wanted to take ownership of this economy. And I told you he would dance. And I told you he'd likely get away with it. And his base is just going to eat this stuff up. Because they don't care that there's tariffs that are continuing to go up on Chinese goods. They don't care. You should have seen the crowd applauding the president. I mean, they're going to eat whatever Donald Trump says, happily, and they will ask for seconds and thirds. And the president knows this. He knows that's how loyal his base is. That's why he took ownership of the stock market and the economy, because he knew he could do an about face. Now, I don't like it because that's poor leadership in my opinion, taking credit for all of the quote-unquote good stuff, the good headlines, but all the bad stuff, it's somebody else's fault. It's the endless wars, it's the divisiveness, it's the investigations, it's the Fed's fault, and it's China's fault. That, to me, is poor leadership, but that's the game the president's playing, and there's more than one way to skin a cat. The interesting thing is going to see how this all plays out. So stay tuned. Much more to come. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you as always. Please like, share, subscribe, get the word out, leave your comments. We would love to hear from you. This is the Capitol News. I am Alex Koritis. Godspeed.